Yes.
Welcome to Property Spotlight Monday. I'm Yolanda Westmoreland, your host, a real estate professional who truly believes that strong communities start with stable homes. We're doing things a little differently today. Instead of spotlighting a specific property, we're focusing on something that stands at the heart of so many real estate dreams, the credit process. Whether you're looking to purchase your first home, invest in a rental property, or simply ensure financial stability, understanding credit is key. To help us navigate this topic, I'm joined by a very special guest, Oscar, from Operation Hope, an organization dedicated to bridge the gap between housing, community resources, and financial empowerment. Oscar, welcome to the show.
Thank you for having me, Jolanda. It's a pleasure to be here and having the opportunity to shed light on how the process of credit interconnects with the idea of home buying and lifting communities.
Yes, Oscar, before we dive into the credit process specifically, can you give our listeners a quick overview of Operation Hope and its mission?
Absolutely. Operation Hope has been around for 32 years. We are a nonprofit organization founded by John Hope Bryan, and the main purpose of the organization has been financial education. We want to make sure that we help people have a solid foundation on what is credit, personal finances, savings, and how those help build strong communities.
Yes, that's fantastic, Oscar. Credit is often seen as a mystery. Many people don't realize how their credit score affects not only their mortgage eligibility, but also their interest rates and long term affordability. And from your perspective, it's a crucial stepping stone for building hope and opportunity. Is that correct?
That is absolutely true. Credit.
What exactly is a credit score?
Okay, so a credit score is basically a numerical representation of what our financial health is, right? It's measuring whether or not we're paying our bills on time, how much debt we are carrying at any given time, and how we are um, making sure that our finances are within certain balance. It doesn't work in a way that we think. Sometimes we think that if we don't use our credit cards, our credit score just goes up or down. No, there's a specific rhythm to it, but it's a wonderful metric that we have to keep in a healthy line.
Gotcha. And it really, how do you think it affects the home buying process?
Well, it affects in a great deal because as part of the lending process and the approval process for lenders, they want to see that we have a high credit score or at least as high as we can have it at the particular time. So then they can approve us a better interest rate, more house, right? More lending power, and also making sure that they can see us as trustworthy borrowers.
I agree. And what factors influence the credit score?
Payment history is the thing that will influence the most whether or not we paid on time. That is about 35% of our um, credit score. Then rightly is the how much debt you're carrying, right? If specifically with credit card debt, if we have too much credit card debt, if we have too many loans and they are all in high balances, all of that will affect the credit score in about 30%. Then there's also the length of credit history, which has an aim about 15%. So that's how long we've had those credit cards, those loans. If we unfortunately um, tend to have the habit of closing credit cards after a while, that will have an impact. Also, what types of credit we are having, a little bit of loans, a little bit of credit cards. That's about 10% of our credit. And finally, new credit also is 10%. Basically, how much do we apply for new credit cards, new loans, and so on. And we have to be very judicious on how we do that, so we can have a strong credit score.
Okay, and I know working with several of my clients, I always tell them whatever you do not, if you're in the process of looking for homes, do not apply for new credit. That could be a game changer, right?
Yes, yes, very good, very good advice. Yes, because when we are in the process of getting close to home buying, the
Hmm.
lenders will want to see that we are not applying to a lot of debt out there, that we are actually managing our debt well, we are not missing any payments, we don't have new debts, new collections, or anything like that. It could
Hmm.
hinder the process. You could start the process of home
Hmm.
buying, and if we get carried away with debt, we could end up having that process get stalled.
Yes, yes. So that means, guys, that means don't buy refrigerators, don't buy furniture in anticipation of this new house, because what will happen is your debt to income ratio will raise,
Mhm.
and you, like you said, you could potentially not be able to buy your home because you're shopping for a home that you haven't closed on yet. So one thing that I always tell my clients, do not put your social security number on anything. Not a layaway, not nothing. We don't want
Mhm.
anything. We don't want anything that is gonna hinder your debt to income ratio.
Mhm.
Oscar, for our listeners who might have less than ideal credit, what are some
Mhm.
practical steps that you can tell them about to help them improve their scores?
Absolutely. So the first thing they can start by doing is taking a look at their credit score across the board. We have three different credit bureaus, right? TransUnion, Equifax, and Experian. Those are the three main companies that monitor credit and gather all of this information. So we first look at everybody across the board, right? Make sure that everybody is reporting exactly the same. Chances are that they are reporting slightly different things. So making sure that everything is on the same page is the first step. Number two, I would say verifying any inaccuracies. Unfortunately, there might be a great deal of information on a credit score that is good, but some things might be off. Some things might be actually wrong. There might be debt that is not actually yours. There might be debt that is too old and it needs to go away. There might be some debts that are showing on your credit, and they are yours, but maybe you pay them off and they're still showing, which I've seen. There are many instances where that can happen. So check for inaccuracies. Another thing you can do is making sure that every single bill is on auto pay as much as you can, right? So that way you don't miss any payments. And making sure that with that, your credit score keeps going up. Um, Also, making sure that the credit card debt it stays at a minimum. Ideally, we use the credit card to build credit. We don't use it to buy something because we cannot afford it on cash, right? Ideally, we're using that credit card just to build something. In this particular case, to make sure that our credit gets better, gets healthier, and we can use the credit cards in a smart way, not in a way where we are in desperation. That's definitely not ideal. Other things that people can do is make focusing on learning more about personal finances, taking courses, workshops, attending one-on-one coaching sessions with people like myself, financial coaches. That way, they can apply all of that knowledge to their particular situation.
That is all great advice. Also, understanding what lenders look for is crucial, I think. Partnering with a trusted real estate professional who can recommend a reputable lender and a credit repair counselor can save a lot of time and frustration. Oscar, can you share a success story of someone who you helped to improve their credit and was able to get a home? I'm
Absolutely.
sure you have a lot
I
of those.
absolutely. Yes, I have plenty. I have a couple, the Williams. They were working with us for a few months. I would say about 6 months. And in the process, they were very, very close to home buying. They had good savings, but they had some blemishes on their credit. They didn't have a lot of debt, but some blemishes. So we started attacking those. So we started by disputing the things that didn't need to be there. We started by creating settlements and payment arrangements for the other things that were showing on their credit that unfortunately were things that were not good, and they didn't have an opportunity of addressing that in the past. So we tackled those, and in a very quick amount of time, basically, right? Because 6 months passed by quite quickly. We were able to, both on husband and wife, increase those credit scores for more than 20 points each and get them within the range where they would have a strong opportunity. Both of them ended up having more than 700 credit scores, and they went on to buy their home. Mr. William was a police officer also, so he had access to some loans that were focused in first responders. And for those loans, we wanted to make sure that their credit was the strongest it could be. And finally, they found the house of their dreams. They got the house for their family, and they sent me pictures. They sent me thank you text messages, and I'm very glad that I was able to help them.
That's what it's about, isn't it? I
Yes,
love that. Absolutely love that. That's the type of story that inspires me. It shows us how improving credit with your help is not difficult, right? It's a
hmm
process. We just need to let people know that there is an opportunity to get the help if you ask, right? So, for those people that are now wanting to take action and get ready to get pre-approved for a mortgage, what are the steps that they need to do? What do they need to do to get in contact with you?
absolutely. So they can reach out to Operation Hope by going to our website, operationhope.org. That way, they will find all of the information. They can register, create an account if they want, and have access to free one-on-one coaching sessions. They could also learn more about workshops they can take online at their own pace, or those taught by a financial coach like myself. They can also make sure that they connect with real estate agents in their community. Like Yolanda does amazing seminars in the community that help everybody learn about the entire process of home buying. That's an
Okay.
amazing source of information. So I'm giving you the plug. But
Yes.
also, I would say reaching out to trusted lenders as well. Lenders are in the process, specifically when you know that you are ready for approval. Lenders are great to guide you in the steps that are coming, but they also can tell you what is the benchmark, right? What is the credit score that you're trying to attain? What level of debt they need you to have so you can get approved? They can target and narrow the focus specifically if you already have a good relationship with that lender. Let's say your local bank, your local credit union, those will be good people to tap into. And also, just keep your eyes open. We know everybody in our circle of friends and family that have had good experiences with a particular um, builder or a particular lender or a particular professional that helps in the process of home buying. So those stories might be valuable to you, and they could be good sources of information as well.
Awesome. Awesome. For listeners that we have today, please remember that understanding the credit process is so powerful. It's a powerful step towards owning property and strengthening our community. If you're in the market for a home or simply want to improve your financial health, reach, reach out to organizations like Operation Hope. It's never too late to start building a brighter financial. Well, guys, that's it for our special edition of Property Spotlight Monday. I'm Yolanda Westmoreland. thanking you for listening and encouraging you to take the steps that you need to get your credit ready and to apply for that home loan. Guys, thank you. Continue to dream, and we will see you next Monday.